How we doing, traders and investors? I think today is a great day to go ahead and speak a little bit on taxes. So as an investor, reporting your trading can be complicated at times, right? Taxes can be punitive. We could get lost in all the kind of IRS talk. And of course, and if you aren't careful, the IRS can and will classify you as an investor. And this could have, of course, terrible ramifications for you. On top of that, due to tax changes, you could have your deductions limited. So if you trade with the expectation, of course, of making a profit, you want to go ahead and catch today's presentation. This is exactly where you need to be to go ahead and learn on topics such as trader tax status. What does it take to qualify? What does it mean to you and the IRS? How does the status changes your deductions? The burdens the IRS places on investors, trading as a business, and the IRS and their special rules surrounding the trader status. And also, stay tuned to find out a little bit more on our suggestions on how to maintaining this status and what mark-to-market accounting can mean and its benefits for you. All right here with Dr. Jerry Allison. I'm excited to go ahead and get into today's presentation. How we doing, Dr. Jerry Allison? You ready to get into some?
Absolutely. I'm doing great, and thank you for having us on. We really appreciate this. So let's go ahead and get into it.
Definitely. We're going to get into, of course, trader tax status versus investor. What does it mean to you? And of course, you guys in the chat, if you guys have any questions on a slide that Jerry's going through, make sure you go ahead and mention it in the chat. You guys can communicate with him there, and I'll go ahead and get into the background. I'll let Jerry take control and lead us to the show. Now, here is one of my questions that I'll begin with. Sure. And of course, like always, one of the things that we want to be looking at, and I'll ask you a little bit at the end, we can talk about it, is maybe a little tax loss harvesting. But that's just something that I look at, Jerry, especially in a market like this when you're fighting a lot of those losses. But let's get into, of course, trader tax status. So I'll let you take control, Jerry.
Very good. Thank you so much, Mitch. Yeah, we will, or I'll try to address tax loss harvesting here in part of this presentation, actually. But we're going to start off, we're going to talk about trader tax status versus investor status. Now, investor status is just regular hobby investing, but we want to be able to take advantage of the IRS tax code, and we want to be able to use that for our advantage. So let's go ahead and go through this, and then I'll answer questions at the end of this. Throughout the presentation, we're going to look at trader tax status, as I just mentioned. And we're also going to look at business structures for trading and how to set up a business structure and what type may be best for you. And then finally, we're going to look at the mark-to-market election and how to utilize that. And at the end, I'll present a little bit of information about traders accounting, and then also open it up to answer any questions that we might have. We'll save those for the end. So first of all, we got to make the attorneys happy. And so to the best of our knowledge, the information in this webinar is up to date. The tax laws do change constantly. So if you're going to use any of this information, make sure you consult with a tax professional. This webinar does not establish a professional or confidential relationship between you, me, or Traders Accounting. And we are not a law firm, so advice provided here should not be construed as legal advice. Okay, let's move on here. A little bit about Traders Accounting. There's a link here. I will put this into the chat towards the end of the program or the presentation. But if you go to this link, you can get a free tax guide. And it's a free ebook about setting up LLCs and other types of entities, and talks about tax advantages, things like that. Our phone number is there and our email is there. I will come back to this towards the end, so there's no need to write this down at this moment. So the first thing, let's kind of take a different view about trading, because when you're trading and you want to actually form a business or actually want to actually use this for making money, you want to think of this as a business. And I used to teach business in college, graduate and undergraduate, and I'd ask students, what's very important thing in business? What's the most important thing? And I get all kinds of answers like you need customers and you need employees and all that stuff. And really, those are important, but none of those apply to trading business. The most important thing for any business is cash flow. Now, you all take seminars and classes on how to trade effectively and get cash flow in, how to bring in money from trading. And you should. That's the income or the inside part of it. And that's necessary. But there's actually two aspects to that. It's not just getting money coming in, it's keeping money from going out as well. And that's one of the things that we're going to address in this webinar. Now, if regardless of the business, if you don't have cash coming in or you don't save enough cash in the business is going to starve to death. I know of a person right now who's got a business in Iowa. He's got tons of money coming in, but it's all leaking out and it's not working. And so as a trader, if you want to have a successful business, you've got to control the cash coming in, but you also have to control it going out as well. And so the points made here in this webinar are either designed to generate cash flow or to protect the cash flow, keep it inside of your firm. Now, we're going to look at three different strategies. We're going to look at trader tax status, we'll look at setting up entities, and then we will also look at mark to market. Now, trader tax status is something that any investor can use. It doesn't matter whether you're investing in Forex, it doesn't matter whether you're investing in cryptocurrency, it doesn't matter what it is. Trader tax status is something that anybody can use if they meet the qualifications. Now, trader tax status, what that is allowing you to deduct trading expenses on your tax return. Now, for individual investors, that means deducting it on Schedule C of your personal tax return. If you have an entity, it will be deducted on the entity's return. And so we want to be able to do this. And let me give you an example here of why this is important. Suppose we have a trader and that is eligible for trader tax status, and they deduct a $5,000 training course. Okay, you spend $5,000 to learn how to trade better. If that trader is in the 32% tax bracket, the trader just increased their cash flow by $1,600. How? They saved $1,600 in taxes. And so they're able to take that and put it back into trading. So actually the training course now, instead of costing $5,000, it now is only $3,400 because you saved some money to put back into trading. And so that's the idea of what we want to do here, to use trader tax status to get money back from the IRS and the state, if your state does income taxes, and be able to take that money and put it back into trading. Now, there's a trap here, though. While we want to think about cash flow, we want to get cash back in the business. We can use taxes to do that. Some people fall into this trap right here. It's unwise to spend money just to get a tax deduction. Don't ever do that. It always results in decreasing cash flow. I had a person a few years ago. He had a mechanic. He was a mechanic, and he was going to buy a tire machine. And he's $20,000. He was going to save probably $6,000 in taxes. He thought this was a great deal. And I asked him. I said, how is this going to work in your business? Is it going to produce income? He said, well, I might use it once or twice a year. And I looked at him and said, this is never going to pay for itself. In a business, if you have a deduction for taxes or an expense in business, it should pay for itself. And not just pay for itself, you'll get the tax deduction as well. Do not do things just for tax deductions. You'll always end up losing money as a result of that. So we can ask, okay, trader tax status is great. We want to be able to deduct expenses on our tax return. How do we do that? Well, first place we would look is IRS publication 550. Now, 550 is kind of the go-to book on investing, and it changes a little bit every year. So I would recommend getting the current copy of it. You can just go to the IRS website and type in their search engine publication 550, and you can download a PDF copy to your computer. It's really simple. But here's the qualifications in publication 550. First of all, you have to seek to profit from daily movements in the prices of securities or commodities. Okay. The second one is your activity must be substantial. And the third one, you must carry on the activity with continuity and regularity. Now, if you're like me, the first question you're going to ask is, what does that mean? Well, the IRS never defines it. And this is typical with the IRS code, is they will always put something in the regulations and put something in their publications and never define it. And so a taxpayer goes out and thinks they're following it, and the IRS comes along and they audit them and thinks they're not following it, and then it ends up in court. So since these are extremely vague qualifications, we have to go to court decisions and really to find out what qualifications are. So these are court decisions that we know that if you're above these, then we can actually determine that you have trader's tax status. So this is what we shoot for. So our court cases summary here, first of all, in Endicott versus Commissioner, the holding period for your investing is less than 31 days. So it's going to be short term. Now, this means day trading. It could be swing trading, anything where you're rapidly. Now, this doesn't mean you can't hold long-term positions, but the core of what you're doing needs to be short-term, and you're turning things around very regularly. Second one, and this is probably the most important one, is Pape versus Commissioner. There's three things that showed up in this court case. That you're trading 75% of the trading days per year. Now, you can take a little bit of time off, but at least 3/4 of the trading days, you need to be trading something. Also, you need to be making at least 700 trades per year. For some people, that's a lot. Some people, that's nothing. I know people that do that in a week, but for some people, that's quite a lot. And you should be spending 500 hours a year in trading activity. That also includes education. It includes research. I mean, anything related to trading. But that amounts to about 4 to 6 hours per day that you need to spend. And then finally, the last significant one is K versus Commissioner that says your intent is either to make a living either as a trader or supplementary to other income. So the idea is you're doing this to actually eventually live on this, not solely, but in part. So these are the qualifications for trader tax status or TTS. If you meet these, you do not need to apply for anything. You could just do it right on your tax return. As an individual, you do it on a Schedule C of a tax return. You start deducting those expenses. But I would recommend having some proof. Well, what do you need to prove these things? Well, the best proof of these things is your 1099-B. That will show you how often or how short you are holding positions. It's also going to show how often you're trading. It's going to show how many trades a year. And things like that. Now, it's not going to show how many hours of active trading you have. And so one thing that we recommend is that you keep a trading log each day. You put the times in it and what you're doing, and just kind of have some type of a log that's there in case the IRS ever does come back. So that is trader tax status. Again, you just do that. You do not need to elect anything with the IRS. You just do it on Schedule C of your return, or if you have an independent business, then you can do it there. Some other strategies, other ways of increasing cash flow, and that's forming an LLC. Now, this is going to seem kind of backwards to people. Why would you form an LLC? Well, usually with LLCs, the income and the expenses are all reported. And unless it's a single member LLC, it's on a totally different form. It's totally different return. Now, why is that important? Well, as we're going to find out, getting stuff off your personal tax return actually decreases your audit risk. So it's good to set up a independent business, if you will. It decreases the IRS scrutiny of what's going on. Now, some of you may be thinking, well, there's an LLC or you start a business, you've got fees. Well, yes, there is a fee for the LLC. In most states, there's a yearly fee. I think Arizona is the only one with the exception they give one-time fee and you don't have to pay again. But that's a decrease in cash flow. So how is that important? Well, you're paying for less scrutiny from the IRS. And so basically, you're trying to get the IRS view off or eyes off of you. And so the cost of IRS scrutiny can far exceed the cost of maintaining your LLC. It's like insurance, basically. I've talked to a lot of clients and they say, oh, my return is perfect. I could undergo IRS scrutiny. And I say, great, no problem. But when they come in and they start examining it, even if your return is perfect, you still have to go prove this stuff. Can you take 10 to 20 hours out from trading and everything else you're doing to actually satisfy the IRS? You may get by unscathed, but you're still lost that time, and time is money. So we just kind of consider this a little bit of insurance. Now, we recommend LLCs because there is a liability or a legal protection there, but there's also another advantage that I'm going to get to here in a little bit. So let's talk about LLCs. There's actually two types of LLCs. There's a single member LLC and a multiple member. Single member LLC is an individual forms the LLC. It's like a sole proprietorship, and it goes right on your personal tax return as a Schedule C again. I've mentioned that. A multi-member LLC is got multiple people, or could be corporations, could be other partnerships, things like that. Just multiple partners that come together to form this LLC. Now, a single member LLC or sole proprietorship is generally taxed on the Schedule C of a tax return. I mentioned this already. But what's nice about LLCs, I just referred to this a little bit ago, an LLC can also elect to be taxed as an S corporation or a C corporation. LLCs have the unique ability of being able to elect how they're being taxed. And so when you choose, if you choose a single member LLC, you can choose to be taxed as an S corporation or a C corporation, and you can change it periodically. You could change it next year. It's once a year that you could probably do it because it's an election with the IRS that has to happen at the beginning of the year. But you can elect how you're going to be taxed. Same thing happens actually with the multiple member LLC. You just got a partnership, that's the default, and you can elect to be taxed as an S corporation or a C corporation. Well, why would you want to do this? It gives you flexibility based upon if there's any tax law changes. It gives you flexibility as to if you want to take investment income and do something else with it. For example, one big thing is retirement. Under ordinary investment rules, you can make $5 million in investing income, and you can't put a dime of it into retirement. You have to have earned income. And all the earned income can be set up through an S corporation or C corporation. So that's where we start with the retirement stuff. And so that gets to be a little bit more complicated there, but it can be beneficial if you want to go that direction. Now, why not just keep as a single member LLC, or why not just form a sole proprietorship and do it personally and deduct those expenses on your Schedule C? Here's why. The number one most audited business is a single member LLC or Schedule C. Those have been abused for decades because people with hobbies have been deducting all kinds of expenses on them and just been deducting everything that they can think of. So taxpayers have been abusing it. So the IRS automatically perks its ears up when they see a Schedule C. Now, what about S corporations and C corporations? Well, there's an issue there too to kind of keep in the back of your mind. S corps and C corps require officers to be paid a salary. Now, that means you need a payroll company. That means you're going to have to start paying FICA taxes. That means you got to have unemployment taxes. But if you want to go down that retirement road, this is a requirement. So that's something that we recommend to our clients eventually, that if they're talking retirement, we can go down this road. So what do we recommend? Let's kind of narrow this down a little bit. Depending on the situation, we a lot of times will recommend forming a multi-member LLC to be taxed as a partnership. That is a great start out basis. It's easy to get money in, easy to get money out. It's very simple. There's no retirement or 401ks or anything like that, but it's a very simple thing. And what we recommend is that people start there as a multi-member LLC, and then later on, and once the trading is down, we got solid income coming in, then we convert to an S corporation or a C corporation. And then, of course, later on, you can convert back. But we want to start a solid basis to get the trading going first. And what it does, it creates a trading business where your expenses can be deducted. But more importantly than that, it gets the business, your trading business, off of your personal tax return, gets away from that Schedule C. Now, a partnership and an S corporation for that matter are pass-through entities, which means they don't pay income taxes. They pass everything back off to their owners, which pay the income taxes on their personal returns. But it goes back on in a much, much cleaner way and never creates that Schedule C. So the idea here is to get away from that Schedule C, so you're reducing that audit risk. So the partners still claim their share of income on their personal returns as a share of a legitimate business, if you will. It looks legitimate to the IRS. Your personal return becomes really, really clean as a result, because all your personal return now is consisting of documents that have already been filed with the IRS. And so there's really no question about what's going on in your personal return. Another thing that happens, when you do the investing business as an individual and you use that Schedule C, for all intents and purposes, you cannot use the home office deduction. Now, I know you can read about that and say, oh, yeah, this is available for Schedule C. But traders only have expenses on their Schedule C, so they never show a profit. And if you never show a profit, you can't use the home office deduction. It just carries forward indefinitely. So it doesn't do any good. But once you get to the partnership, the multi-member LLC is a partnership, or if you go to the S corporation, that home office deduction does open up for you incredibly. So that could be up to like $1,500 a month, or sometimes even more. So this is an important thing to keep in mind to get the IRS eyes off of your returns and actually form an LLC. And you can actually, if it's an LLC, you can shift back and forth to how it's going to be taxed based upon the tax regulations. And you got a lot of flexibility there. All right. Having said all that, everything I've talked about so far is for everybody that's an investor. Now I'm going to go and talk about mark-to-market election. The mark-to-market election is only for those trading options and stocks. There is an argument to be made it could be applied to cryptocurrency. And the IRS hasn't balked when I've done it, but generally stocks and options. And what it does, it's an accounting method that values the gains and losses in your account. It doesn't really look at the individual transactions. What it does, it looks at your account value at the beginning of the year, the account value at the end of the year. If your account goes up, that's what you pay tax on. If your account goes down, that's what you get to deduct. It's a very simplistic way of looking at it. Now we have to adjust for contributions and distributions and interest and dividends and other stuff like that. They're going into the account. But the concept is really simple. So mark-to-market election gets around wash sales. We mentioned a little bit ago tax loss harvesting. Tax loss harvesting can really work on the last couple weeks of the year if you sell those losing stocks. But if you go and you buy them back at the beginning of the year, then what happens is the wash sale rule kicks in under normal accounting. And you can't, and those losses that you're trying to capture for 2022 just got deferred to 2023. So that can be a trap. So mark-to-market gets around that, actually. So another thing that happens is all your losses or gains or losses become ordinary gains or losses on the return. There's no more capital gains and losses for anything that's earned under mark-to-market. Now, why is that significant? Because if you have an ordinary loss under mark-to-market, you can use that to offset W-2 income, 1099 income, any other income. And that's what's nice about the mark-to-market election. On the downside, that $3,000 limit on net capital losses goes away. And so you increase your cash flow instead of getting those losses down years down the road. And I've done tax returns this year for people under mark-to-market that wrote off over $200,000 in losses. They got every penny back from the IRS that they paid in for the year. And so they could take that money and reinvest it. And any loss that's left over, they're able now to transfer that to the next year and use it all up. And so it's very much a beneficial thing for them. And then the trading account with mark to market is no longer subject to wash sale rules. If you're familiar with wash sales, and I'm not going to get into it right now for the sake of time, but what wash sales are, they're deferred losses. And a lot of times, and I've seen it several times this year, people not under mark to market have these wash sales. This person actually lost money in their account, but because of wash sales, those losses got deferred to the next year, and now they're having to pay tax on it. And so wash sales are actually a nightmare that can happen for investors. So this is one way around it. Now, for mark to market, this is an election. And I mentioned it's already best for those trading stocks and options. You have to make this election. As an individual, you have to make, first of all, as an individual, you have to be qualified for trader tax status. But also as an individual, you have to make this election between January 1st and April 15th of the year in which you want it to start. So the next time you can make it personally is for 2023. And you can make that election between January 1st and April 15th. For an existing entity, a pass-through entity like a partnership or an S corporation, the election has to be made between January 1st and March 15th. So those are the dates. It's got to be made at the first part of the year for the year it's going to start. So that has to be done. It's got to be timed out. Trader tax status, you can do that any year. You can do that retroactively, whatever. But mark to market has to be done with the IRS at the beginning of a year you want it to start. All right. Quick disclaimer. I mentioned several paths here. We've got trader tax status that allows us to save money on tax returns. We've got entities that you can use to actually open up some deductions and decrease IRS scrutiny. We talked about the mark-to-market election for stocks and options traders. But I want to point out that there is no one-size-fits-all plan for anybody. We have to know your specific situation as to what's going on. A lot of times we do recommend multi-member LLCs, and you may be saying, oh, I don't have a partner. I don't have a spouse would work great, but I don't have one. You can set up a family trust that could be a 1% member, and you have the 99% member. There's a lot of different ways of setting up that multi-member LLC. Even if you were the only person on earth, it could still be done. So there's ways to do it, but there's cases where we recommend a C Corp. There's cases where we recommend S Corp. We've got to know the particulars of things. So there is no one size fits all plan. You need to talk to somebody about it. Now, let me talk about traders accounting here real quick, since I've given you all this information. We do provide entity creation and maintenance, so we can create those LLCs. We can create those trusts in any state of the union. We don't do anything in Canada for those of you who are maybe listening from Canada or any other country. It's all U.S. stuff, but we do those entity creation and management. We do bookkeeping for the trading businesses, whether it's mark to market or not. So if you want somebody to keep track of how you're doing in your business, we've got a bookkeeper that will do that for you. Also, we do the income tax preparation for all types of returns, 1040s, the individual returns, the partnership returns, the S Corp returns, C Corp returns. We do the trust returns if necessary. I've done pension returns, nonprofit returns. We don't do many of those, but we do all types of returns there. And then finally, we do tax and entity consulting. That if you want some time, you want to spend some time talking to us about your individual situation, we will sit down and talk to you about what's best for you and how to get that set up. So let me go to the information about traders accounting one more time, and then we're going to kind of end this thing up here in a little bit. So our phone number is 800-938-9513. If you want to book a consultation, if you want to give us a call, if you want to set up a tax situation, or you want to set up an entity, whatever, please give us a call. We can do that. However, for all of you, there is a free ebook that you can get by going to that link that's on the screen. And by going to that link, I am going to try to put that into, let's see here, the chat right now. And I know some of you have some questions. I'm going to get to the questions here. And Okay, where do I put it into the chat?
Yeah, I got you. Right in the comments, you should be able to. If not, just don't worry about that. What you can do for me is in our right-hand side, you'll see a private chat option. You can
There we
drop
go.
it in there, and then I can
Oh,
put it up.
perfect. Okay, there we go. And I thought I had it there. Let's see here. Maybe not.
Gotta get it.
I gotta get it.
Guys.
Okay, hang on. Let me
I
try
want
this.
the free ebook too. I'm about to click on it.
Yeah, yeah, it's actually very valuable.
It's a great presentation you just did there, Jerry.
Thanks.
I mean, I myself am a person that have been kind of in.
Let me bounce out of here.
Yeah, no worries. I'll let you pull it up there. You let me know once you have it there, and then I'll make sure we get it in the comments. But as a person myself that has been trying to, really get kind of trading right, and it takes a while, right, just to even get it to the profits. But if you're really smart, you could have been using those opportunities to really give you some benefit. I really like the mark-to-market aspect. Of course, that's for everybody to determine what's best for them. But really, I mean, it's such a good aspect to kind of learn what kind of options we truly have. Even if you look this up on, let's say, Google, it's not going to give you the answer that Jerry just gave you. And I think that's why it's so important to try to get to the right advice. So really, truly appreciate you coming on. I just threw up that link for you guys in the chat. So let's start going through maybe some of the questions here that we're giving in the chat, and we can run through that. And of course, if anybody else has a question, throw it up. This is your opportunity. You get the one-time chance to talk to the one and only Dr. Jerry Allison here.
All right. Well, let's get to some of these questions.
Let's do it. Bruce Young here, I think, was the first one. Let's go with this one here. Is the 75 to 80% of the trading day and 700 plus trades a year, or both need to be met? So is it one of these qualifications or both?
It's both of them that have to be met, as well as the 500 hours of education, research, and trading. So all of that has to be met that we know of. I mean, this is what's coming out of the court case. If somebody wants to go underneath that and claim trader tax status and then defend it in court, hey, that'd be great. We now have a case. But I don't know many people that want to go to court and spend all that money to prove something.
Yes, definitely. And 700 plus trades. If you're thinking about it in terms, you're thinking maybe about 100. How many trading days in a year? We got, it was
200 something, wasn't it?
Yeah, it's like 200. You're thinking, that's like 4 trades a day.
Yeah, it's almost nothing. And most people do that. At least if you're a busy day trader, that's nothing.
Yeah, exactly. To kind of break it down in that aspect. But let's go to the next question here. It's coming from Beans and Rice, one of our favorites here. What if I was a trader tax status and halfway through the year, I made substantial gains, 7 figures, and then held for long-term capital gains? Would I be disqualified for the trader tax status?
Yes, you would, actually. And not only if you did that and you had mark-to-market, you'd lose the mark-to-market election as well, because you have to have as an individual. So it's very important that you keep trading something throughout the year. Even if you made your 7 figures, go back and start trading $100 or something a day, just nothing, so that keep whatever you got for the long term, but just kind of keep trading something as you go along.
Yeah, because that's what it is. It's kind of more of an active trader, right? If you become more in that passive sense, then
that's right.
No longer in that same kind of status. But we got one more question here. Where do you go to elect the mark-to-market status? Is it through a broker?
Question.
Is it through the IRS? Do we call our mother?
Don't call your mother. No, actually, it is an election you have to make with the IRS. Now, once you elect it, you tell your broker, because they want to know if you're mark to market.
Yeah.
But it is basically, it's changed a little bit in the past year or so. The tax commissioner has actually changed how to do it. But publication 550 does talk about that, and you have to send basically a letter into the IRS stating you're electing mark to market. Now, generally what we do is we put that letter with the tax return or with the extension by April 15th, because we know the IRS has to process those. And so we know they look at them. If you just send in a letter to the IRS stating you want mark to market, You'd send it to your whatever your tax processing center is. However, I would recommend if you do that, make sure that you send it certified mail and you get all kinds of documentation to back up that you sent it, or else they may lose it.
Yeah. And we all don't want that one to happen, right?
No,
Yeah.
not at all.
Definitely. And I like that little tip too, the certified mail, make sure you get that, keep those receipts too.
Prove everything.
Definitely. Always. Let's go to the next one here. Bruce Young and Peaches and Cream. We appreciate the feedback. Very informative. Let's keep it going here. Bruce Young saying, can you set up an LLC corp after you make money, or do you have to set it up first?
No, actually, what we have a lot of times are individuals start trading in their personal accounts, and that's fine. And when you start trading, you can set up an LLC at any time. And then once the LLC is set up, then you have to set up a business trading account and start moving the cash over as things. There's some IRS things that go on here, so that's why I'm saying move cash over. Don't try moving securities over, or you can get into a bind there. But then as soon as, and by the way, here's another exception. Once you set up a brand new entity, you can elect mark to market right away for that entity. You do not have to wait till the first part of the year, because you set up a multi-member LLC today. You can say, I'm mark to market today, and take care of that. And so actually one strategy, and I'm starting to rattle here, but a little bit, this gets into another strategy. We are the perfect time of year right now, because those of you who are familiar with wash sales, you've been trading actively in your accounts, and it's probably your personal account. And up till now, you've got all these wash sales built up. If you were to start an entity right now and move your trading assets over into that entity under mark to market and let your personal account go dormant, and this is the key, once the personal account goes dormant for 30 days, all those wash sales become regular losses and disappear.
Nice little tip there. A little extra tidbit there. I didn't know that one. There's always a little sneaky tool that Jerry's keeping.
That's
That's
right.
why it's definitely great if you guys want to yourself. We've thrown up the link. You guys can reach out to tradersaccounting.com. Definitely go ahead and reach out. Get that free ebook too. I'm going to definitely be clicking this right as soon as I get out of this. I'm going to have to get into YouTube and click it myself. But let's keep going. We got one more here. Crassy asking us, would I need to move funds from my personal trading account into the new LLC trading account?
Yes, because the LLC has an EIN. It's an employer identification number from the IRS. And what happens under a tax number, whether it's a social security number or an EIN, that's where it has to be reported. So they're not going to take your social security number and just change it to the EIN. You're going to have to set up a new account and move everything over.
Beans and Rice last year paid $156,000 in capital gain taxes, reinvested those gains, now down 50%. Am I screwed, or can I do anything?
You're screwed.
It's okay, Beans.
I hate to say it, but
it's beans and rice, my friend.
Well, I'll tell you, and I don't mean to belittle this, and I perfectly understand the situation here. Definitely. But that last year, a lot of you remember, and this is where Beans and Rice is coming from. You remember the AMC GameStop thing?
Yeah.
And I was talking to a bunch of people in February. They made a fortune through December. They never put anything back for taxes and lost it all in January. So they had this huge tax bill for 2021 and nothing to pay it with in 2022. So here's another little tidbit. As you're investing and you've got these gains, start putting something back for taxes so that it doesn't bite you later on.
What do you think about quarterly, like paying off the taxes quarterly if you're really active?
Yeah, if you're really active, it's usually a good idea to make quarterly payments. And now you can do that online. You can go to the IRS website. It's irs.gov/payments. And do a quarterly payment. They'll draw it right out of your bank account. Most states will do it now for you. So you can just do it online. The due dates for quarterly payments, if you're interested in those, are April 15th, June 15th, September 15th, and January 15th. But yeah, I recommend it.
Yeah, it's an interesting way to take an approach, especially, when we put the money to the side, there's nothing like actually paying it. So then you actually know, all right, there you go. I got it out the way. I don't have to stress too
Plus,
much.
if you've got anything left over, you can always put it back into investing, but it'd be better to have stuff left over than not have to have enough at all.
All right, Bruce Young with a quick one, I think here. What if I started trading in May and made the money for the qualifications, but of course didn't get really active, I guess, here until May?
I think he's going to a partial year here. So
Okay.
if as an individual investor, if you did this starting in May and didn't start making money, you might have a problem with the trader tax status requirements. However, if you started the LLC or something in May, an entity in May as a brand new business, then you're prorated because your business now starts in May and go to December.
Nice. Danielle here. Is it too late on the year to get an LLC to claim trader tax status for 2022?
Absolutely not. Matter of fact, we're setting up LLCs all the time. And so they're getting set up. You just start trading and you have the trader tax status for whatever part of the year you have. Just make sure you're actively trading and you should be good.
One more. I think we got last one here. And if you guys got one, get it in. I'm giving you all the opportunities here. Jerry's sticking around for us. Let's do one last one here. Does mark-to-market apply to options, Forex, and cryptos, or only equities?
Mark-to-market was specifically designed for stocks and options. So both of those, they're kind of linked together anyway. So that's what it's specifically designed for. Mark-to-market does not apply to Forex because Forex got a totally different taxing structure. It's already ordinary income or ordinary loss, so you don't have to worry about that. It's like futures and that, they've got their own taxing structure, so you can't do it. Crypto is the one that's the gray area. Some people will say you can't use it with crypto. Some people will say you have. I have used it with crypto. The IRS has not come back and said anything. So if you make the mark-to-market election, go ahead. I would say go ahead and put your crypto underneath it.
Okay, there we go. Crassy, I'm thinking of dropping one more. As let's say majority owners of multi-member LLC, would I be taxed twice on profits from entity?
Generally speaking, no. If it's a pass-through entity like a partnership or a S corporation, those do not pay income taxes. So you just file an informational return with the IRS. And then the money, the income flows to your personal return where the tax is paid. So you only pay it once. So no, you're not going to pay twice.
All right, and the last one, I'm calling it here.
Okay.
Timeline, we'll give you one more here. If you're already having an existing LLC, can I leverage a DBA of the primary LLC is in a different industry? I'm not sure if I read that right. But
I think you can, an LLC, if it's already in a different industry, let's say construction or something, we'll just use construction right now, you could do trading in that LLC. That's theoretically possible. And so if you wanted to really get trading going, you could do the trader tax status and mark-to-market in that construction LLC as well. That is possible.
And Bonnie, since it was your only one, I'll give it to you here. Can an existing LLC be used for trading?
Absolutely. Now, I want to caution though, an existing LLC, if it was formed prior to 2022, then you have to make the election for mark-to-market between January 1st and March 15th generally. But if it was formed in 2022, you can actually make that election with your first tax return that's due in 2023.
Well, I'll tell you what, Jerry, I don't know if this is good news. I would take this as good news. TVG timeline here putting hashtag new customer.
Well, good. We're glad to have you and look forward to working with you.
Thank you for joining us today. I hope you guys enjoyed today's stream. We talked a lot about trader tax status. So if you guys want to reach out to Dr. Jerry, maybe understand more. And also, of course, make sure you get that ebook. I want to see that thing fly out the window. I don't know if it's possible, but somehow it say sell out tomorrow. That's what I hope to be seeing.
Shut down the servers. There you go.
Yeah, definitely. I hope you guys have a great one. Hope you guys enjoyed us doing this kind of content. And hit the comments after. Let us know if this is what you want to see more of. And of course, we'll reach out to Jerry and bring him back on. Absolutely. Appreciate you coming on today, Dr. Jerry. And we'll definitely have you back on another time.
All right. We appreciate it. Y'all have a great day.
Have a great night, everybody.
All right. Bye.